Good evening and welcome to the Australian Stock Market Show. Now the All Ordinaries Index reversed up nicely last week, so will that continue into this week? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the world currencies, and for our main topic in tonight's show, we get into the top 3 cybersecurity stocks to buy or whether you should buy an ETF. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the stock market. Tonight we're excited to share our thoughts on some great stocks like Crowdstrike, Hack, ETF, AMP, the major world currencies and more, so get comfortable as we'll get into those soon. I'm Dale Gillham, your host for tonight, and joining me are 2 of our team of highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. And together, we're Australia's most trusted stock market educators. Good evening, team. How are you?
Great. How are you?
I'm super fantastic, like I was last week.
Looking forward to the long weekend.
Yeah, I'm going to see Geelong and Hawthorn on Monday at the MCG. I can't wait for that one.
That'll be
Collingwood's
exciting.
waiting to win. So
given up.
If they do, Phil will be happy. But enough about football tonight. As we mentioned, we do get into the major world currencies, but first let's take a look at this week's hot stock tip. Phil, I know you've got a ripper for us tonight. What is it?
I sure do. The hot stock tip for tonight is Homecode Daily Needs REIT, ASX code HDN. So let's get straight into it. On your screen right now is the marketindex.com. And you'll see Homecode Daily Needs REIT is a registered managed investment scheme in Australia. Its principal activity is a property portfolio, predominantly in the metro located convenience-based assets. Now, to simplify that for everybody,
I was kind of hoping to do that.
It's shopping centres because, they're into shopping centres and around large format retail is what it's called, and also health and services. Now, some statistics here. We've got a 1-year return of positive 8%, which versus the sector of minus 18 is actually very good. And it's also beating the ASX 200 on a 1-year measure, which is minus 3.83.
So they must have bought the right shopping centres then.
They have. It seems as if they have. And they're a new company. And look, they've got a market cap of 2.6 billion, ranked within the top 200, Janine.
Okay,
You're going to be happy with that, eh?
Not outside.
No, not.
She's saying about time.
Yeah. But when we get to the chart, and we'll get to the chart right now, you'll see that it is about $1.30 this stock. So before you congratulate me too much, you might want to have a look at the chart. And look, guys, we'll start on the monthly. You'll see here, I've got some markings up on this one. And what really caught my eye is obviously this stock hasn't been around for such a long time, about 4 or 5 years. And it's 2021 to 2024, 3 years. I told you my maths wasn't great, but
You're a good trader, but you can't count.
That's right. So it's had a fall since September 2021 for quite a while. And what I found interesting is since making its all-time low in October 23, it's gone up for about 5 months consistently and continuously, which is the longest up run since the all-time high, for this stock. So since that whole down move, which is telling me that perhaps now we're starting to look at a change in the momentum for this one. We've also got that momentum line that the stock's broken through now, and you'll also have a look, because we often talk about this, Dale. I know, we've mentioned this a few times, where you're looking at a trend, and on the chart you'll see that when we do things technically, we're not guessing anything. We have signposts of when a stock is going to reverse, and just a simple way of looking at it is you'll see these peaks, or these highs as they call them, where the stock, as it's falling, it's never really taken these highs out. It's had one instance here, but not taken the higher high out before, and you'll see in recent price action we've done that. So it's giving us all the early signs that it wants to make a turnaround. So that's what's got me excited. Obviously, there's a bit of resistance around this black level where I've got marked, so it's about 9%, and the long-term target is about 30% in this stock. So what do you reckon, Janine?
Well, look, I'm not going to be convinced until the end of the month's over, and it would need to close over that high for me, because it could just roll over because the highs aren't getting higher. That's the only thing I'd say.
What a tough customer she is, I
Yeah,
tell
she
you.
is. I actually thought this was a good one.
Oh, you thought you could impress her with that one, but no, it takes longer than that to impress Janine. Anyway, well, that is it for our weekly hot stock tip. Now, shortly, we're going to get into our topic for tonight, which is all about cybersecurity stocks and ETFs. But before we do, right now is your opportunity to get involved in the show and have your questions answered. Now remember, we do prioritise phone callers, so pick up your phone and call now. It's 039290 9988, or you can text your question to the number on your screen. Now the first caller into tonight's show will get a free copy of my book Accelerate Your Wealth, so pick up your phone and dial 039290 9988. Now while you do that, tonight we'll give you our thoughts on the major world currencies, so let's get into that.
On your screen right now is a watch list of the major world currencies. So let's get into that. We can see there we've actually got the British pound sitting at the top, Phil, this time. So it's all a sea of red at the moment against, this is British pound against the US dollar. You're just trying to trick me, aren't you?
No, look, it's interesting you say that, because the pound was one of the worst performers last time we looked at this, and it is on a yearly setting, so we're looking at as the year's rolling on from January. But yeah, look, as you mentioned, it's quite nice.
Compare that to the Aussie versus US dollar. We're actually down -4% at the moment. But it just seems to be getting worse as we go down the list there. Looking at the Japanese currency, I find this one interesting because we've talked a couple of times about the Japanese stock market. Now, it'd be interesting to see whether the Japanese currency is performing over the long term differently, or whether this is just a bit of a blip.
Well, the Japanese market's flying in terms of the stock market,
but the currency is doing the opposite.
Well, we'll bring up the chart now and have a look, because it's very, very interesting. You can see, just one look at it, we'll go to the monthly chart, and the Japanese dollar is not doing well at all against the US. It's very much like the pound looked last time we looked at the currencies. It's, positioned literally near its all-time low. So we know with the Japanese dollar, if I bring up this black horizontal...
But surely this is due for a turnaround now. This just looks like it's trying to set up for a turnaround.
Well, where I've got this marked, this black line, is historically whereabouts, you'd like to see the stability with the Japanese dollar versus the US. So it's quite a way away from that now. And again, it boggles the mind when you've got a stock market flying through the roof and the currency...
Interest rates in Japan have been low for a long time, and so that's going to be driving whether the currency is in demand by people investing in the currency, because it's a stable currency, a well-run economy, etc. So if the market's moving up, that would imply that their economy is picking up, and if their economy is picking up, that would then imply that sometime down the track interest rates are going to start to rise, to maybe slow it down a little bit, which will then go straight into its Japanese yen.
Well,
it's all cause and effect.
Just looking at the charts, you can see there that there's a really nice trend moving down there, which is, we could talk about all the reasons why and why not, but then when we look at the chart, it's just still pointing down, and really has to jump above this high of November 2023 for me to start to get excited about it. So at the moment, we'll keep an eye on it, but right now there's not a lot happening in the currency, is there?
But is this an opportunity?
Well, potentially. That's why we've flagged it, because it could be at the end of a run. This nice little pattern, the sort of things that you'd expect to see in a normal market correction, which, even though the currency is being sold off so heavily, what it's doing on a big picture sense is really quite a normal formation. So now we just need to see a move through that trend line, and off it goes again slightly.
And I mean, historically, these kind of markets, they're not stock markets, so they're not, generally over time having that growth aspect and growing. It's like more reverting back to, the mean price. And right now, it's, if you just envision it like an elastic band, it's very, very stretched. So when you said before, is there an opportunity, then there is potentially one coming.
Well, I know you've been trading currencies for years. That's what I was asking you about, is there opportunity? Because with currencies, it's easy to trade both long and short.
Yes.
We're going to talk a bit more about short trading later today. or later tonight when we're talking on our main topic. So be interesting to keep a watch on that one. But anyway, that is it for our thoughts on world currencies. And before we get into our first email, remember to get your questions answered live on air. You will need to text into the show, or you can give us a call on 92909988. You can also send your questions in advance to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Now our first email is from Josh, who says, "Good morning guys, hope you're well. I've started investing late last year using it as a savings account for a house deposit. Now in 6 months I've been able to get aside the 20% required. Yesterday, Thursday, the market was up and I pulled everything out except for BOE. I think once their production announcement comes out, the price will rocket. Now do you think, given the current volatility in the market, I should hold the deposit in cash or reinvest for another month or so into an ETF until I'm ready to buy a house? If you think the ETF, do you have any recommendations? I understand no one can predict the future, but do you feel some are safer than others? Thank you, Josh." And he says, "P.S. Once I've got the house over the line, I'm going to do the diploma of share trading. I spoke to Jenny not too long ago and I'm extremely excited to begin learning as much as possible." Josh.
That's fantastic, isn't it?
Now, and I know he's asking us for personal financial advice. Like, that's not even a question.
Yeah.
And we can't give Josh advice like that, but what are your take on it?
What we can do is, I know Josh mentioned the fact that no one can predict the future.
We can.
Well,
we just did it yesterday on our big recording that we've got for
the light bulb went off,
talkingwealth.com.
so that would be great for him to watch. You know, we, as you said, we did a recording saying whether we think the market's going over the short, medium and long term over the next couple of years. We talked about where
the next crash is happening, everything else. So that's going up, I believe, Thursday onto talkingwealth.com.
So that would be perfect for him to watch. But it is on Talking Wealth, so you do need to.
People can register a free 7-day trial if they're not members by just going to talkingwealth.com. But we cover the whole market and how we can time the entry into the market, all that sort of stuff. But getting back to, he's got money for a house. Now my answer to that is, if you've got to buy a house in the next 3 or 6 months, keep it in the bank because you know it's going to be there. If you want to speculate on the market going up and down, you might have to settle a house and you won't have the money. So to me, it's more important. If it's more important to have a house than an extra $1,000 or $2,000, just go with the house. That's my thinking anyway. And I know you've got some thoughts on it.
You've already answered what I was going to say, so thank you for that.
Well, in the past we've had people say exactly the same sort of question, and they've gone into the market and we've told them not to, and they've done it, and then they haven't been able to settle their property. And I put a lot of pressure on it, because the end of the day is, what is the intention? And just trying to speculate over the next month or whatever on it. And an ETF is just a rubbish thing anyway, to have an index ETF. Why would you do that? You might as well just buy one of the big stocks and put your money into it than that. But if you need a house, Josh, stay with the house, put the money in the bank. But again, your choice. If you want to speculate on the market, it's your choice. We're not giving you financial advice. But thank you for emailing in. Now we have an email from Mike, who says, "G'day guys, was wondering if you could take a look at AMP and provide your thoughts. I entered the stock at around $1.30 in November 2022 after it started an uptrend. Now I set a stop loss of around 15%, and at one stage it was hanging around a loss of about 12%. So I kept an eye on it, and then it received an announcement and dropped a further 15% overnight, smashing me over my stop loss and looking down the barrel of a 25 to 30% loss. I'm generally quite disciplined in my rules and can sell when I hit a stop loss, but this one took me by surprise. I'm still holding the stock and trying to manage my way out of it, and currently sitting at a 20% loss. Would love to hear your analysis on the stock." Phil?
Yeah, interesting, Mike. I mean, if we bring up the chart here of AMP,
everybody knows what I think about AMP.
Yeah, what I find interesting about Mike's email is that he is right, and I've got an arrow marked here in November 2022, where the stock was purchased around $1.30. Now, it did have that one big dip where the stock fell out of bed, but what's happened is it's had, and we're on a monthly chart here, it's had, 1, 2, 3, 4, 5, around 7 months of price action where it's hovered, in between that 15% stop loss and actually gone back up to his buy price in September 2023. So, Mike,
he hasn't been following his rules.
The discipline there that you're talking about, I think it might be a little bit loose.
I think
because
he's fallen in love with the stock.
Yeah, you've had 3 opportunities to get out at 15%, and you haven't. And now the stock's back above 15%. It's one of those things where we really stress that you've got to make your decision and stick to your decision when selling. And I'll go to the daily chart just to show you that even with these falls on the daily chart, there's been, apart from there being that one gap, and this is the stop loss level, you see that there's no gapping. There's enough times to get out on a daily basis. Yeah.
I think that Josh is very brave to actually have put this stock up, and thank you so much for doing
it. It wasn't Josh, it's Mike.
Mike. But I think that you've actually got, there's an interesting thing here, because if a stock, it's one of the practicalities of trading is that all of a sudden if a stock drops through your stop loss, takes it out and then starts to bounce back up again, you look at it from a trader's point of view and say, okay, my stop loss is triggered, okay, I've got decisions that I can make. I can either get out then and there, black and white, and I'm out. But if the stock looks like it's turning around and starting to push up...
So you're saying he made emotional decisions rather than
He made an emotional decision, but now that it's actually turned up, and last month there was that really strong bar up, I'm looking at that and thinking, if I was him, I'd stay with it and just manage it and decide what my new stop loss is.
Mike, you don't need make logical decisions, trader decisions, not emotional ones. But Mike went on to also write, he said, I also think I may have had been yourself or Phil discussing options trading a month or so back and mentioned a book by Tony Hunter. And I've been unable to find where the source of the book was. I'd like to start learning about options trading. I have read a lot about your recommendations in the past and you haven't put me on a bad one. I did a lot of book recommendations. He says, I am a subscriber of Talking Wealth and have been from the get-go and loving the loads of content on there, and would recommend this to anyone considering joining. He's got a disclaimer, Dale did not pay me to say this.
Yeah, that's gorgeous.
Basically, Phil and I did a podcast. We've done a few on Talking Wealth, so you can just Google the podcast if you like. And we're chatting about different trading, full-time trading, options trading, FX trading. And I mentioned Tony Hunter, who was the former head of ASX, who's on the front cover of my latest book, Accelerate Your Wealth. He's recommended that. And I had a lot to do presenting with the ASX, but I was saying he wrote a booklet for the ASX on options trading. You can get free from the ASX website. It's probably just a PDF nowadays, but you don't need too much more than that. So that's where it is, Mike. But let's move on. We now have a caller on the line. Welcome to the Australian Stock Market Show. Who have I got on the line?
Joseph Walker from Townsville, my friend.
From Townsville, what a lovely place in the world. Thanks for calling in. What's your question for us?
Well, may I ask a question on the company Bub?
Yeah, absolutely, Joe.
I know they had a lot of management issues over the last 1 or 2 years, but I think they may have started to sort themselves out and are in a clear direction for the future. And would you consider investing in them now?
Are you looking short or medium or long term?
Medium.
Medium term, okay. All right, so you're looking for possibly buying Bubs in the medium term. You got it up, Phil?
Yeah, we do. We've got the chart
Thanks for
up.
calling in, Joe.
Yeah, look, so this is, it's a 20-cent stock at the moment.
Yeah. And
if we just bring up the monthly chart for now, you'll see that it is a stock that was quite illiquid in its early part of its life, or especially back in 2012. I mean, the history goes back a lot longer, but of recent, let's say the 5-6 years, there is... the volatility is increasing. The bar shapes are telling me that there's a bit more liquidity, but to me, again, it's one of those ones. It's 20 cents at the moment at all-time lows. To me, it's way too early to be getting into this. What do you think, Janine?
I was just nodding my head saying I'd agree with that, but I think it's great that, Joe, you're trying to pick stocks that have a turnaround story, but sometimes the share price might take a lot longer. They'll pump it up and say that it sounds fantastic when actually they're not really there yet, and that's what Phil's telling you on the chart, and that's what it's saying. So good question, but just a little bit early.
I think a lot of people were expecting Bubs to be another A2 milk. And whilst it did take off for a while and then it's come right back down again, A2 milk's doing really well. I would go A2 milk every day at the moment. I picked that back in December. as a good looking stock off its bottom. But A2 milk doesn't look like Bubs when back in December. You go and look at A2 milk back in December, it looks totally different than Bubs. And was a much easier one for me to pick, and it's done really, really well.
Yep.
But it doesn't mean Bubs is not going to take off. But
Yep.
I don't think living on that sort of thinking that it could be an A2 milk probably won't do him very, very well. Anything else you want to say before we move on?
At least just
Just
give
the volatility.
Yeah, give it a bit of time. I mean, you're not losing anything if you're sitting at 10, 20 cents. Even if it starts to, as a scenario, ticks up to about 50, 60 cents, and then see how that pullback works after that. That'll give you a good indication whether the sellers are weak and there's more
It's
buying
not
to
for
go on.
everybody because it's
It's not for everybody.
not liquid enough. Yeah,
All
for a
right,
lot
well,
of
thanks, guys. Now we have a text from Nathan who is asking, just want your thoughts on APA. Has been on my watch list and looks to be closing above a long-term downtrend on the weekly chart for the second consecutive week. What do you reckon about this one?
Yeah, I don't mind this one actually. I think that looks interesting. Just looking at the monthly chart there, it's been pretty volatile, but there's a really nice support level across here. So if this holds out, could be good. I'd look at it only in the short to medium term. So we're talking probably 3 to 9 months, possibly up to that $10 level, because after that you just don't know, might have a decent pullback from there. But I think that looks quite an interesting one.
Yeah, you agreeing with
I
it?
agree 100%, yeah. And even, if we zoom in a little more, you can see that some serious selling came in around August 2023, which is around that $10 from the start of where it was. So I agree 100% with Janine, yeah.
Wow, that's pretty good. You're not even sitting really close.
We're
so
not
she can
having
punch
an
you.
argument now. We're
I know.
agreeing.
Normally I agree with Janine when she's really close because she can hit me.
Well, we're all dressed in white today, so
We're
I
all
think
dressed in
it's going to
white.
work.
Cool. Well, anyway, thanks, Nathan, for your text. Now for tonight's topic, we'll share the best cybersecurity stocks and ETFs to invest in and insights into the best time to buy this hot market. One hot stock is Crowdstrike, which is up 170% in just 12 months. Now, before we get into some stocks, I want to talk a little bit about what cybersecurity actually is. And the answer is quite simple. It's all about the protection of things like your online information, data and networks. Now, we've all seen the news reports about cyber attacks on companies, like what happened to the telcos and health funds recently. As the threat of more cyber attacks grows, so does the level of spending to counter that risk. And unsurprisingly, this spending is in the trillions. Yep, you heard it right, trillions. And here lies the opportunity for you. Now, I recently read some research from a group named Cybersecurity Ventures, who said cybercrime and cyber insecurity are new entrants into the top 10 rankings of the most severe global risks over the next decade. So what does this all mean for us? Well, the greater the risk, the greater the spend to mitigate that risk, and the greater the growth in revenue for cybersecurity companies that try to protect us from the risk. Now, to me, this means these companies become potential takeover targets. The real question now is, how do you take advantage of this opportunity? What stocks do you buy and when? Now, we know the biggest companies are in the US, but there are also some fantastic stocks here in our market. Now, I want to ask you both, should we be looking at the US market, or should we just buy a global ETF in this area, or do we support the Australian cybersecurity stocks? I'll go to you, Janine.
Yeah, I think you have to keep an eye on the Australian market. It's smaller, okay, so that's one issue.
Yep.
So therefore the liquidity is not going to be as high, and there are smaller cap stocks. But in saying that, there are also ETFs that people can actually invest in that have exposure to a more broad,
Broadly across Australia or broadly
the globe,
international or both?
Internationally or both. Yeah, look, but if you can get one that's global, it's going to be better because you'll have exposure to some of those big ones without taking the risks associated with investing in those ones offshore. But in saying that, some of the ones in America, and what's been happening is we saw the tech, like with the tech stocks, we saw the tech stocks take off, then we saw our Australian tech stocks take off. So this is where, we're seeing the likes of Crowdstrike make incredible gains. And, it doesn't mean that investors should go and just invest in any cybersecurity stocks, just hoping that they'll go up. Like you said before, it's got to be about, when to invest in them. When is it the right stock for me, and when is the right time to
Well, I
invest?
thought with the IT, obviously IT is a huge chunk of the US market, and I think a lot of our IT stocks just rose because people just thought, well, it's running in the US, it's got to be running
Rising
here.
with the
and
tide.
that's the wrong thinking, isn't it, really, because the company has to have value and has to be a good company. So just saying, well, because IT is going up in the US, it's going to do here.
But when it comes
Same
to
with
the smaller
cybersecurity.
stocks, you don't have to think that the same way, because it's all about perception. So you want to be in there when the opportunities are there, but you've just got to have the right set of rules to be able to trade them. That's really
You got any
important.
thoughts on it, Phil?
Yeah, just think about if you're going to go to the US, think about the risk, the currency risk that you hold, investing outside of Australia, and that's pretty much it. Yeah.
Okay, no problems. Well, I want to get into some more facts to really uncover the size of the opportunity here. Now, according to Cybersecurity Ventures, growth in this year is estimated to be around 15%, which is interesting. But this next bit of information is more important. Cybercrime costs rose from $3 trillion in 2015 to an estimated $8 trillion this year, and recent estimates indicate the global spend will reach at least $10.5 trillion annually by 2025. So this is more than a 300% increase in 10 years. Now, we spoke before about where you could invest, with one option being Australian cybersecurity stocks. Now, the only issue I see at the moment is that many of the Australian cybersecurity stocks are currently small, which we've just mentioned, or they're small caps. So I want to get your opinion, or the team's opinion, on whether investing in Australian cybersecurity stocks really is the best choice for everyone watching, or should they be reserved for certain types of investors or traders? So I'll go to you, Phil.
Yeah, look, I mean, anything in the small cap space, you have to be careful as a trader or an investor, because there is that risk of, and we've spoken about it many times, investing in those 10, 20 cent stocks where the stock may do nothing for a long time, for years, or it may get delisted or what have you. The volatility, the liquidity risk as well, knowing that you can transact at the price you want to get in and out of the market. So these are all the things that you don't have to worry about if you're trading a BHP or a CBA, a very liquid stock. And they're things that traders need to know before they get to that end of the market, definitely.
Janine?
Well, I think it's experience is one thing. So, having the knowledge and experience is key to being able to trade all different types of stocks and markets. So if you're limited in terms of the amount of knowledge that you have, then you want to keep it really simple and just trade more bigger liquid stocks. And you may miss out on some of these opportunities, but then they may become bigger stocks, and they'll, like WiseTech didn't, start out as a big stock, did it? So we could see, and same with the Crowdstrike. I mean, all of these big stocks could end up being the ones that they trade, but or the small stocks rather could end up being the ones that you're trading as a WiseTech.
Yeah, but often you get people, they get into these small cap stocks on the opportunity. So they see the opportunity, like we've talked about. There's a huge opportunity here, but the problem is they can buy in, because you can always buy a stock. Somebody will always say you a stock. But most people don't know how to get out or when to get out. So what happens is they see this rise and they go, oh, I'm making a lot of money. Then it tanks, and then they don't get out of it. How often do we see that?
So many times.
And then it goes sideways for months or years, and then it goes up and they go, oh, cool. And then they still don't sell. So that sort of stuff. So that's what we're talking about here. Now, before we look at the ETFs and stocks, I want to bring up an article from McKinsey. Now, McKinsey summarised the research really well, highlighting a $2 trillion gap in the cybersecurity market. But if you look for these stocks in Australia, it's clear you must be educated, as the risk can be higher than the returns if you don't know what you're doing. Now, luckily, we're here to help. So let's go to the charts. Janine?
All right, so we're just going to be looking at some ETFs to start with. So here on the screen, you'll see Beta Shares Global Cybersecurity ETF called HACK. Is it appropriate? Isn't
What
it?
a name.
So it's not a hacks ETF, it's about hacking. Probably, obviously. I love it.
Yeah, so this was quite ingenious, wasn't it? And we're looking at just the appreciation. So this is similar to what Crowdstrike's done. So without taking the risk of these smaller stocks, there's a 64% increase off that bottom there, which is not, it's not to be scoffed at. It's a decent run. Now, we could see a bit more consolidation in this. I think there could be another opportunity to get into this, but just be really patient. If it pulls back, we'll get one. Phil?
Oh, look, I'm just looking at this story because, a lot of the times you hear buy ETFs, it lowers the volatility. It takes away a lot of that stock-specific risk that you so-called get. But just looking at this one here, you're on a monthly chart and you're seeing, to me, price action, which is not very clean at all. You're seeing large tails, wicks, price action that's quite messy. So it's you need to be careful because I know a lot of people go to ETFs and they go there because they want that security or that safety, which once you look at a chart, it's not really here in Hack anyway.
Yeah, it's sort of a false sense of security, isn't it, at times to think that, okay, I'm trading something bigger and therefore, I should be safe, but it still needs to be traded.
Absolutely.
So that's Hack. The next one we've got, Dale, is there's not much history on this one, okay? So this one's called Bug, another interesting name. That's cute, isn't it?
I thought it was an interesting name.
But what you'll see is a similar sort of thing, in terms of the rise here, and this is what Phil was saying before, the volatility is going to be there. This one's up 38% from this low, just not long after it started on the market. That was November 2023. And, it's just pulling back, same sort of thing as what Hack is doing at the moment. So you just have to be patient if you're looking for one of these to add to your portfolio. But, some of the people watching may actually prefer to trade an individual stock and just pick it at a much better time.
Well, they might. That's the thing, isn't that the choice you've got to make? Whether how experienced are you, how liquid is the stock, how volatile is the stock. There's lots of things you've got to look at, isn't it?
And measure the opportunity. Measure them up against each other because sometimes one will be better than the other, and other times it'll be the stock.
Now, look, sometimes you'll get an ETF that hasn't got a lot of history, but in the same industry, like we saw with Hack and this one Bug, there'll be parts of it which they'll be running together because they'll have similar investments potentially in them. So you may actually find that even though Bug may not have enough history, which we like as traders, you still may actually be able to use Hack as a guide to what's happening with this one because it's an ETF, it's not a stock.
Yeah, and that's a really, really good point. And it's, I think you both made some great points. One is trade to your level of knowledge first, and knowledge and experience, and the second is look at all the signs and look at other areas to show you where the pathway is, I suppose, is what you're talking
Exactly.
about. So that's pretty good. So they're the two ETFs, yeah? So now we've got some stocks to look at, have we?
We have some stocks to look at.
All right, well, how about we have a look at some stocks?
Sure, let's go.
How many have we got?
First one, and now we're going to the US, which is a little different for us. The first one's Crowdstrike.
Australian stock market show.
Yeah.
Well, look, the Crowdstrike was sort of like, the sexy line it's done 170%.
She's trying to justify breaking the rules.
Potentially the stocks on the Australian market could follow that. So that's what we're looking at.
Okay, so there's a reason in her badness.
Yeah,
yes.
That's right.
Okay. So what is the stock?
So Crowdstrike is the stock here, and you've got the monthly on the left, weekly on the right, and you can see that since January 2023, this has had a stellar run. It's had some short-term movement here, and then it really took off around December 2023 and hasn't really stopped. I mean, the bars are still quite long and quite strong. If we look on the weekly chart, we are seeing price action start to consolidate a little here, which is interesting given that it is trading around that all-time high. We know when stocks or markets are at around those all-time highs, they do have the potential to settle down and maybe come back a little bit. So are we talking about this in terms of an opportunity? Or?
Well, look, I mean, in terms of Crowdstrike, you'd be looking at this, if you were thinking about an ETF or you're looking at some of the other cybersecurities, I'd do analysis on this one. Yeah, definitely. So you could see the top of the chart and the way that rose. It looks very much what the big ETFs look like. So I'd do some analysis on this one just to get an understanding of what's happening in the sector. But there could be a little bit of a sell-off also on this after such a big rise. There might be some profit takers coming in.
A lot of speculators rising up with that 300% move, and they'd be starting to take profits, wouldn't you?
Oh yeah.
So you'd be thinking that anyway. And well, obviously the big end of town would be looking at this and going.
But if this goes through its high, I'd be watching that because it could have another run.
Okay. So anything else you want to talk about on Crowdstrike at all? Or?
Oh, I think we can probably have a look at its counterpart, the next one, because that's a pretty interesting
another
story.
US stock, as you're telling me? Or is it?
No, we're not going to be that cheeky.
Oh, okay.
This is an Aussie stock. Now, this is Tessernet.
Tesserent.
There you go. Tesserent Limited. And this stock, wasn't having a great time like Crowdstrike, contrary to what that was doing, but it got delisted, Janine.
Yes, which is interesting because just as, you know, like we saw the cybersecurity stocks taking off, or the one Crowdstrike in particular, and while this one was actually falling away, but there was an interesting story about this one, and I did a podcast on this.
Yeah, I remember that.
Because you had to put up with me complaining about it.
I know. When an Australian stock gets taken over by an overseas company,
I stick up for my fellow Australians.
It's like coming home very late and very drunk.
Yes.
To your wife.
It's not a good ending.
Not a good ending.
I just don't want to talk about that sort of thing.
Yeah, but
Can
I
we
mean,
move
obviously,
on?
Tesseract. It was one of those really, I'm not going to say a darling stock on our market. I'm not going to say that. But it's one of the ones we looked at for that cybersecurity area of being a potential great stock.
It could be a potential takeover, but I didn't think that they would try to nab it off the bottom. And I never would have, you know, if I was on that board, I wouldn't have handed it over right as it's at the bottom. And then they, you know how when they announce the takeover, they say, oh, the price was a premium, it's 20 to 30% above what it was closing price was in the VWAP average.
But the
and then you look at the chart
necessarily mean that's
and
what
you,
it's valued
and you think, well, hang on a minute,
Exactly.
you know, you look at this chart here and you say, okay, it was off its bottom, like, you know, seriously, it could have just been about to turn around. And
But
then
this is the same case as Appen, remember? Only a couple of weeks ago, Appen was on its all-time lows, and I kept talking, I got Appen, I'm liking Appen, I'm just too early. Then this US company come in and, well, unofficial, you know, bid, and ASIC questioned what was going on, why the price went up 30%. This unofficial bid, well, the next day it got taken off and Appen's going down again. But the same sort of thing, they're trying to get it really, really low. Now, Appen's probably still on that company's list to take it over, but they're probably going to do it the right way now. But at the moment, Appen's going down. But, you know, to me, we need to protect our stocks. You know,
well,
like
I thought
that,
this was
especially
interesting, and I
like that.
talked about it in my podcast because in doing some research, my understanding was that they had some government contracts, and I thought, and a French company was taking it over, and I thought, wow, that's interesting, isn't it? Right around the time when all of that hoo-ha was going on about the submarines, I thought, okay, we've seen that happen. Now I've got a French company wanting to take over.
But we'll let you protect our cybersecurity. And then they'll hack into the submarines or something, won't they? I don't know.
Yeah, we better not go there.
Too many conspiracy theories.
Exactly.
So obviously they can't buy this.
Yeah.
We've talked about an American stock and a stock that's now delisted. So how about we get into stock they can actually buy?
Some of these could be takeover targets, and that's why we're having a good look at them now. This one is Prophecy, which I really like. Short term, it looks good. It's you know, people will think, oh, hang on, Janine, you said $1 is a really good level, which it is. You know, and one day it could get back above that. It's already done it once, so potential is there. But just the way that's moving up's really nice. There's a resistance level across here. I'll just mark it across there. And it could actually rise to around that 90 cents or $1 mark as part of this move up. It's just had a nice push off that bottom there. But again, it's one of those sort of stocks, you need a lot of experience to be trading this sort of thing. You need to be able to back test it and understand it. Even, you know, once it got through that high, there's a good sign. But yes, Phil, have you got something you want to say?
Oh, look, I agree totally. I mean, I love it when stocks like this show their hand. You know, it's had this nice little period of consolidating around that 50 cent mark, which was quite a strong level of support. It's touched it on a few occasions and then clearly shown us that it wants to go higher. It's popped its head up. It's had a fantastic March so far. If it can hold above, you know, this high here in April, I see 90 cents. I think you're being generous. 90 cents. It could definitely get there easy. And I would expect a bit more out of this one.
Okay, so let's just go for the daily. Just before we go on to that next one, I just wanted to appreciate what happens. So see 1, 2, 3, 4, 5, 6. It's sort of like 1 week and a half, you know, that this move has been made, which is interesting. So we'll have a look at the next one and see how that happens. Now, this one looks pretty awful. Like, you know, it looks like...
What is this one?
It's called, I'm glad you asked,
Corporation.
Senators Corporation, SEN. This looks like Tesseract, you know, it looks the same sort of thing down here, a big move off the bottom so far. It's way too early to try to pick this one if you liked these sort of penny sort of stocks, and it's very small. You have to get an appreciation if you're trading penny stocks of the market depth, and that's something you have to really understand depending on the size of the position. There's a lot more things to actually know. People think, oh, I'm just going to buy a small stock, I'll get more shares and potential to make more money, but there's just so much more that they've got to keep an eye on when they're trading these sort of stocks. So at the moment, too early, but another one that could be a potential takeover.
Well, when you're talking about a stock that's around a couple of cents, that whole, this is what we were talking about before, is people buy some of these stocks on the potential.
You get this
and
gold
they go, it's
fever.
only 2 cents, I put 10 grand into it, I get a lot of shares.
Yes.
And if it goes to $1, I make a lot of money.
That's not the way to think.
And that's 99.9% of the times not the case. It's you get that happening, or you just get sideways and nothing for ages. So, I know you're wanting to say
it goes to that. It speaks to that. What's cheap?
What is cheap?
What is cheap? Because if we go back to the chart, you're looking at this. You might have thought 10 cents was cheap. And then you might have thought 8 cents was cheap, and 6 and 4 and 2, but all the way along you're buying, you're getting wiped out as it continues to fall.
What's Buffett's famous quote? Price is what you pay, value is actually what you get. And so is 2 cents value, or is it just a price?
Exactly.
So next stock?
All right, next one is AR9. Now, this one's also just come off a bottom as well. Notice how they're all very similar in shape, which is interesting. They've had these strong rises after COVID, and then a pullback. So it's with that AI and that tech, everything was taking off at the time. So at the moment, this is what Dale's saying. You can get this sort of sideways move, this protracted sideways move that can just last for such a long time, and eventually the stock could just drift down to nothing. That's the risk that you're taking with these sort of things. But I think that if we get a break above these highs here, this is back in November, these peaks here, there's 3 of them, then my view will be that this thing's off and it's on its way. So that's all I've got to say on AR9, Phil.
Yeah, look, it's unfortunately the other aspect of trading stocks at these levels is that the price action is very, very messy. And when it's I know we always speak about why make it hard for yourself. Find stocks that give you clean, nice price action. And this one in particular, you can see that we're seeing price zip up and down, quite volatile, not giving you any clean direction, which speaks to the fact that you do need to be really, really good and be an experienced trader to even attempt to try and trade things like this.
I think this is a really important conversation, because there's so many people that we see or talk to that try to pick these little tiny stocks without having any knowledge or understanding.
Well, because I can make a lot of money if I buy that stock and it doubles in price in 2 days or 2 weeks. I can make 500% over a couple of days or a couple of weeks on a stock like this one. And that's what they're thinking. They think, how much money can I make really quickly?
But what happens when they come and they learn how the market works? They just go away from this sort of stuff.
Well, it is. I mean, we know that, after teaching thousands of people over the last few decades, we have so many people that have come to us that they're, can I put in inverted commas, gamblers? And they come to us because they're trading stocks like this on no rules and on this whole gambling mentality of I can make a lot of money quickly. And as the more they go through the course, the more they realise how dangerous they were and how poor their trading rules were, their strategies were, but now they make far more money and they trade a lot less. And they don't trade stocks like this because you don't know what you don't know.
That's right.
And so they just follow what's happening out there. They follow the leader. It might be watching people on chat forums or watching YouTube videos and these people trading these intraday 5-minute tick charts, all of that sort of stuff. And they get excited about all that. I could do that. And then when you're doing it, you realise how hard it is by following these people, because 90% of traders don't make money. So look at all the traders on YouTube and look at all the traders on chat forums and don't do what they do, and you'll make far more money. And that's what we're trying to say here is,
absolutely.
And people will be standing here watching tonight and be going, oh yeah, what you're talking about is really boring and slow. No, it's not. It's actually faster and you make more money. Making money is boring, and we talked about that yesterday in our recording. Yeah. It should be really boring, and if it's boring, that means you're making good money because you're just repeating the same thing over and over again.
Now, in saying that, once they've got the experience, right, if they want to trade 1 or 2 of these little ones as part of their whole investment
you can, but that's your throwaway play money. It's that satisfying their gambling mentality by just putting a little bit of I lose it all, but all my money's going over here and I'm making big bucks here. And that's what we teach the traders. Got another stock? We
definitely do.
Yep, I'll bring it up.
Is this one more exciting?
This one is another exciting stock. It's called Curia. That's interesting.
Yeah, I like this one actually. Just the consolidation that we're seeing. Good. It looks interesting. It looks like it's a bit more mature in terms of the unfolding of it. And this level that I saw on one of the other stocks that was a smaller stock, This one's actually got a much nicer level and it's making higher lows, which is great. So if this takes off there's a potential for this one to move higher. I'd see it heading to sort of 45 cents from there. What about you, Phil?
Yeah, and I mean, just to put some perspective on what I said before in terms of clean price action. Now, if you remember the one we just looked at, and you look at this one here, you can see that clearly as it's trending. You know, I like to look at stocks when they're trending and see how they're doing it. And you're seeing here clean lower highs, lower lows, and that, you know, is the stuff you want when you're looking at stocks to trade, because it's going to be much easier to trade. And this one is actually giving it compared to the one we saw before.
And stop losses.
Stop losses too. Yep, all the good stuff.
Because it's more volatile, and there's a potential that the stop loss you have to set is going to have to be tighter, isn't it?
Correct. And the price action is going to be respecting those kinds of levels and that type of movement. But I'm with you, Janine. It's, you know, although it is a 20-30 cent, it's giving a real nice formation that you've chosen. If it can break through 30 cents, then this is probably the pick of the bunch for me.
So what you guys are saying is, if you're a good trader, experienced trader, then these sorts of stocks are great for a smaller part of your portfolio. But if you're not necessarily experienced trader, you're more of an investor, go for a good ETF.
Exactly.
That's really what you're saying. So, but anyway, so that is it. But after the break, in our special bonus content for our talkingwealth.com members, we are going to share how you can peek into what the big end of town are planning, which stocks are being targeted, and how it could impact the stocks you are holding right now. Well, that is it for our topic for tonight. Now stay with us, as we still have got plenty of emails and stocks to go through. But before we get into these, for those watching on YouTube and on Facebook, you can watch all of tonight's show, plus the members only exclusive bonus content on talkingwealth.com. So head over now and grab your free 7-day trial. Now whilst you're there, you can also watch our Australian stock market report that is released each Monday. Now this is the report where we share our views on the Australian stock market, and we also give you some great buying opportunities that even just one will pay the yearly subscription to talkingwealth.com. Now if that's not enough, you'll also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset, well-being, fintech, business, and loads more. This is all on talkingwealth.com. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 for Melbourne, 929 09988. That's 03 9290 9988. Or you can text the phone number on your screen. Now whilst we wait for your call, let's get into our next email. Now our next question is from Inga, who says, Dear Dale, Janine and Phil, firstly, what a fantastic show. I never miss it. Great work. Phil, you are a fabulous addition to the team. I love your thinking and input. No questions today. I just wanted to take this opportunity to say thank you. I recently completed the CFD Forex course. A big thumbs up to the Wealth Within team. I'm very grateful for every opportunity. The journey was fantastic, and as such a big learning curve. A big shout out to all the assessors, but especially Veronique, my assessor for the diploma, Nathan on the advanced diploma, and CFD Forex course. Thanks again, huge fan, Inga. What a nice email.
Beautiful.
She loves you.
Yeah, well, I haven't blushed in a long time, but
I know.
hopefully I'm not red on the screen.
Jenny and I didn't bring you on the show so that you can take all the limelight from us. We've had it on our own for 5 or 6 years. So.
Oh, it's good. Well, I mean, it's great that, you know, it's doing something and it's helping people, because that's the whole point of what we do. Otherwise, why do it, you know?
Yeah, no, that's true. That's what we love doing, what we're doing anyway. But our next question we have is from Kushal, who says, Hi, Dale, Janine and Phil. I'm looking to buy Close the Loop Group, sustainability-focused, growth-focused company. What are your views on this? If it is the right time to get in, thanks, Kushal. Now, Close the Loop Group, I've never heard of these guys.
Neither have I. It looks really volatile.
It does look
Phil,
very
what do you
volatile.
reckon,
Yeah, look, we've got it on the chart. It does look very volatile. And to me, instantly, just by looking at the bars here on the monthly and weekly chart, if I am to guess, it does look quite illiquid as well. So from that perspective and everything we've just spoken about, Kushal, it's one of those stocks that if you're not super experienced in dealing with this kind of volatility, then I would say stay away. But if you do want to have a look at it, I can see that there is a little bit of support around here which I'll mark up for you around 29.30 cents there. Sorry, 28 cents, which the stock is now positioned at the interesting level. But we always talk about trading on confirmation.
Yes.
And right now we aren't seeing any of that confirmation, or at least I'm not, for this one to buy. So good idea. And when we do our hot copper videos, we do hot, cautious, not. This is a caution.
This is a caution.
Caution.
You got any additional
I'd
thoughts?
say a not for me, only because to me it looks like it's got further to go and could end up below 20 cents. That would be my concern right now, given the way it's unfolding. If it doesn't get back above 36 cents and really strongly to close above it after any week, then in the next few weeks, then to me that's a potential it's going south again.
Now, yesterday when Phil and I did that recording for where we're predicting your lords, predicting the next crash, which we did, was an hour-long video, by the way, too. It was like, we thought it might be half an hour, but you know what Phil and I do when we get on charts.
Gee, you must have been thirsty at the end.
We're a bit, because we did like all these recordings, like our Monday market report for talkingwealth.com. We did a hot copper report. We did, obviously, we also did this hour-long recording, but we talked a lot about confirmation and why you need to have all of these rules and tools and strategies to make a confluence to confirm the stock or market is stopped falling or it stopped rising. Because we talked about what happens at peaks, what happens at troughs, all the signposts around it to get people prepared for the next bull run and also the next crash that will happen over the, with before the end of this decade. We're going to have another big crash, because it's now, as we said last week, now's the most important time for people. It's not the time to be lazy now and duck your head in the sand. Now's the time to make wise decisions, because we know we're going into a bull market, but like all bull markets, it's going to run out, and when it runs out, it's going to crash, and it's going to take a lot of people's money with it, because the next couple of years are going to talk to a lot of people will think they've got, they're bulletproof. And we saw that before the GFC. You and me saw that before the GFC. He was a bit too young.
Well, yeah, we saw it after COVID as well.
And
We've
we saw it
already seen
after
the first part
COVID.
of
We've seen it with Bitcoin. We've seen it lots of different things. And I remember chatting to Phil yesterday on this recording for Talking Wealth. What was going on before the GFC, or the people we were talking to, and then what we were talking to them after the GFC. The ones that listened to us were like, thanks. Oh, it was wonderful, Janine, when I saw you speak and you said this. And, oh, thanks, Dale, you saved me hundreds of thousands of dollars. And then the people that didn't listen going, I'm down 70, 80, 90%, what do I do now? And the answer was, listen to us back then. So it's really important, if you're a talkingwealth.com subscriber, watch that recording. It'll go up on Thursday. If you're not a talkingwealth.com subscriber, head over tonight, get a free 7-day trial. It'll go up on Thursday, and have a good look at it. You'll be glad you actually did. But we now have a text, and this one is from James, who is asking, I love some analysis on LTM, and advise me if it would be worth looking at. He's got it undervalued at $6.44 and fair value at $16.37. You covered the merger in December. Any thoughts on that one? So what do you reckon?
We've got the chart up here of LTM on your screen right now. And did you mention something about a merger?
Yeah, you said we covered a merger on it in December.
Okay, because it doesn't.
It may not be the right code then.
Yeah.
It doesn't have much history on the stock. This one's only got about 1, 2, 3, 4 months history on the stock.
Has it?
Yes, and if we are to go
off... It might have already merged, that's possibly why, and it's got new data. Remember like Coles and things like that, they got split off.
Okay.
That sort of stuff. So it might have been that sort of
So
thing
it's a bit hard to judge off this price action alone what to do with it. Did he mention that he holds the...
Okay, it's AKE, it merged to LTM, so it was AKE.
So let's do a bit of...
Allchem, wasn't it? Is Allchem AKE?
Arcadium lithium.
Sorry. Gotcha. Yeah, I remember that. Yes, I remember that.
So let's do a little bit of a...
Little one, snooping.
Snooping, cut and pasting here, and I'm bringing it up, but we're not getting any info on AKE. It's because it's been delisted.
Okay.
Okay, so unfortunately we can't get the data for AKE to have a good look and give a comparison. And I mean, if we're just going off LTM here, it is...
Just talk about the concept though of what happens in that situation, because you're obviously talking about it before that situation happened, and what sort of expectation you had after. Did you have any thoughts on that?
Oh, I mean, look, it's hard to judge with... Well, I can't see what was before, but,
Well, the thing is that well, obviously this was a merger takeover, whatever it is. It's a new company now, isn't it? So you do need to look at that. But obviously, looking at it when they do merge, there's often a lot of issues around the merger. Is obviously costs and reorganising things, new management taking over, a whole lot of disruption on the actual company. So it is really, really hard to determine. I mean, I know you did have a price of it now and what it is undervalued, and the valuation that you've put on it is way above its current share price. That does not surprise me at all, because often you look at analysts and they're looking at that future and going, okay, well, it's really worth this, but it's not trading at that. And that's really what Phil was talking about a little bit earlier ago, about trade on confirmation. Right now we're going on the chart that we can see without looking at all of the announcements going on over the last couple of months. We haven't seen
it was trading at a really important level, so that's why you would have been talking about this one.
Correct.
So it had bounced off that really important level, and I've actually got the chart on the screen now.
Worked it out.
She worked it out. I know she's a superstar, Janine.
I usually call you the tech guru, don't I?
You normally do. You normally ask, how do I do this, Dale?
Yep, exactly. Isn't that a female thing?
I'm not just a pretty
All
face,
right.
that's what I'm saying.
Okay, so if you have a look here, I mean, I don't want to put words in your mouth. So if you're looking across here, that's a really important level for the stock there. It had risen up, and then, you saw the LTM chart. It's actually fallen away since. If we just have a look at how far that's fallen away, we can see there, it's if I drag this out, we're just going to have a look at the percentage, if it's going to let me. No, it's not going to let me. Yep, maybe Phil, you can grab it. Is that 40%? Yep, 44. Thank you. Your time to shine.
Yeah.
Okay, so 44% down here, and you can't look at it exactly the same way, but at least you know that it's actually continued to move down, but it's still at a very important level. And we now see that it's actually looked like it's trying to break through that low. If it reverses now from here and turns back up again, I'd be more hopeful. But at the moment, because if it closes the week below this low on the 9th of February, I'd be quite concerned about it. Volume's dropping off, which is a good sign. It may actually run out of steam on the downside. That's what I can see.
Yeah, and the thing is just to wrap this up, obviously, we often see predictions of fundamental value of stocks by brokers and analysts, and it doesn't mean that's what the stock's ever going to trade at, because the fundamental, the valuation of a company is like a linear line, and everything else is like a rubber band around it. It goes above it and it goes below it and it goes above it and it goes below it. So at the moment, this stock, from what you're telling me, it's a no.
Yep.
It's stay right out of it until we get confirmation the bottom's happened. Now we've got a text from Karen. Now Karen has texted us in, and I'm not sure what the stock is. She's asking about, there it is, APX. And she said it's had a rise in the last few weeks. I'm yet to buy into it. Just waiting for an optimal moment. Any advice from my stock market gurus would be lovely. I think she's talking about you, Janine.
This makes me laugh, right? Because you and I were just talking about this
Guru's
secret
a
code.
four-letter word, remember
secret code APN. What is it? Do you want to guess? What's APX?
APX.
Appen. See, she listens to you, doesn't
I know,
she?
She does listen.
That's amazing. So this is actually one of the stocks that you think is interesting. And now looking at the chart,
this is a play stock
it does.
for me. It's not my super. It won't be my super fund. This is a play stock for me.
Well, this thing could, if it does take off, if it goes through this prior high there on the weekly chart, it could go rip-roaring up. But remember that dollar level? It's actually below it, Phil.
Oh, no, good for you.
Drum roll. Okay, so if we then just put a line across here, we can see once it gets back through that line, Janine will breathe a bit of a sigh of relief, and so should the Appen CEO. And then looking at that from there, we can see an upside to 100% if it goes off.
Oh yeah, and the rest.
This will be a multi-bagger when it takes off, but when is the question?
That's right.
And it's not right now.
The good thing actually about this one here is if I zoom in on the weekly chart, you'll see we've got a big chunk of new volume and strong volume coming compared to what's been happening over the last couple of years, which is really, really nice given where the stock is positioned. And if you just look at the relationship between the buyers and sellers here, what I find interesting is that, you've had the sellers have their charge through here, and contrary to what's been happening in the past all the way down through here, you've had the buyers come out quite strong relative to this recent period. The sellers have had a go, and this is one of those scenarios where it's kind of giving you a really, really good advantage to see what's next, because if the sellers can't really take out that previous low and price starts ticking back up, to me that tells me that the momentum's changed a little here, and perhaps the buyers are going to start
Well, it
getting
is a
stronger.
little bit artificial because,
Yeah,
as I
that
mentioned
takeover.
earlier, because that US companies come in talking, an unofficial,
Sometimes the
non-binding, maybe we might buy it at this price, and it was only because ASIC questioned the company, Appen, said, what's going on? You're up 30%, what's going on? And then they go, oh, well, there's this company talking with us. And they go, well, you need to tell us. And shot up like a rocket, which is that big bar that you saw on the chart there. And then the next day, the company in the US says, oh, hang on, we're pulling
Well,
out
it was
of that.
interesting because it was already rising for 3 months
But-
strongly before that.
Correct. So that tells me something's fishy in the wood, when you see that.
And the interesting part, though, is that the sellers actually, apart from last week where they fell, this week they're consolidating, and it looks like they're ticking back up. So that's the real interesting part to me, because if the sellers now, given it was one of those news announcements, if the sellers can't really send it back down, then maybe there's something to this.
Well,
Look,
to
we
me,
can
it might
say
be
that,
thinking there might be a takeover. The takeover still might happen, so they're not wanting to sell. Maybe that's what it is. I don't know, but I'm still watching it anyway.
But we can talk like that, and I just want to caution people about this because I know
Well,
that.
don't speculate.
Yeah, that's right. I know that some people will be thinking, "I'll just buy a bit, just to see if there's an opportunity here." But that's not the approach. Is it? We don't want people just guessing.
No, when you speculate, you end up losing money. But anyway, now it's time for you to show your support for our channel and smash that like button. Also, click the subscribe button now. Subscribing helps you, but it also helps others find our channel so that we can help them become better traders and investors. Now, before we let you go, what was your favourite part of the show? Was it our topic for the night, or was it our world currencies analysis? Let us know by commenting below. Now, thanks to all of those who are watching on YouTube and Facebook. Now, if you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all of that and much more. Next week in our main topic, we get into undervalued metals and lithium stocks that are trending right now. Make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love the show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.